Are you seeking 100% financing for a residential fix and flip project and finding that it's not easy to find a lender for your deal? In this video, I'm going to explain the requirements for getting the highest possible leverage, the typical pricing, and how to find hard money lenders that do offer 100% financing to house flippers. I'm Butani, CEO of PrivateLenderLink.com, where investors and brokers find direct, private hard money lending companies. If you're in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and get notified every time we release a new video. So many people visit our website looking for 100% financing and don't realize how difficult it is to qualify for it. The ones that do qualify may realize that the cost will reduce the projected profits to the point of killing the deal. And the reality is, a very small percentage of hard money lenders in the United States will consider funding 100% of the purchase price and 100% of the renovation costs. I'll explain why later on. I first want to jump right into the qualifications. 100% financing is only available for residential fix and flip projects where there is a clear exit strategy with the sale of the property in less than 9 months. And by residential, I mean single-family homes. Some lenders may consider condos, 2 units, 3 units, 4 units, but the single-family home is the easiest property to sell and the easiest to appraise, so long as it's in an urban or suburban area. No lender will consider 100% financing for rural homes, a ranch, or a specialty property type. And 100% financing is not for rental homes. If you're planning to rehab and then hold the property as a rental, 100% financing is only possible if the lender funding the purchase and the rehab also offers the long-term rental financing. For lenders that are willing to fund the entire purchase price and the entire renovation budget, they can justify the risk as long as the loan amount is not higher than 70% of the after-repair value, and some lenders will max out at 65% loan to after-repair value. In addition to the ARV, there are a few key requirements to qualify for 100% financing. The first is experience. You'll need to have completed at least 3 successful flips within the past 2 years. If you don't have sufficient experience, you'll need to have a down payment of 15 to 20% for the purchase. If that's not possible, the lender may consider your deal if you partner with another investor who does have experience, and both of you would be guarantors of the loan. The second requirement is cash reserves. If the project goes over budget, the lender will not give you additional money to make up the difference. Once the loan amount has been set, it cannot be changed, and you'll need to cover any cost overruns out of pocket. The lender will ask you for bank statements showing that you do have a good amount of cash on hand, just in case. The other reason for showing you have cash on hand is you will most likely have to make monthly interest payments, but some lenders will set up an interest reserve to cover the monthly payments. So if you don't have enough cash reserves and you don't have any experience flipping houses, it will be impossible for you to get 100% financing. The third requirement is the project scope. It has to be a light rehab consisting of mainly cosmetic renovations such as kitchen, bathroom, flooring, landscaping, etc. If the project involves adding square footage or anything structural that requires city planning approvals, you likely won't find a lender to fund 100% of the project. The reason is there's a good chance it could take longer than 9 months, and if a fix and flip loan takes longer than that, the profits may start to diminish and the lenders don't want to provide such high leverage for a longer term. The lender wants you to get in and get out as soon as possible. The fourth requirement for some private lending companies is a decent credit history. Even though hard money loans are primarily based on the asset, the lenders will hesitate to give you the maximum leverage if you have a poor credit history. Some lenders don't care much about the score, but they will do a credit check to see if you have a bankruptcy, a foreclosure, or other major events. And if you do get approved, a low credit score could mean higher pricing. So what are the potential costs? The average pricing I've seen for 100% financing is 16%, including points. That could be structured in several different ways. 12% plus 4 points, or 11% plus 5 points, or 10% plus 4 points and a 2-point exit fee due when the loan is paid off. The total could be higher than 16%, or it could be lower. The lowest pricing I've heard of for 100% financing with fix and flip deals is 13%, structured as 10% interest plus 3 points plus closing costs. Also, you will likely have to pay the points and closing costs up front at the close of the purchase. So even though it's called 100% financing, you could end up contributing some cash to the deal. For example, if the lender charges 3 points on a loan amount of $300,000, That's $9,000, plus closing costs could be about $1,000 or $1,500. Once you've gotten past the potential costs, the ARV is an important factor. Some lenders will advertise 100% financing with a maximum loan to after repair value of 65%. When you run the numbers, you may find that a 65% ARV won't cut it, and you'll have to end up contributing 5 to 10% of the total project cost. Like I said earlier, hardly any hard money lenders offer 100% financing, and the reason is it's just too risky. From a lender's perspective, if you don't put any of your own cash into the deal, it's easier for you to walk away from the project if it goes over budget or it doesn't work out for whatever reason. When a lender has to foreclose and finish the rehab project themselves, that's a big loss for them, even if the home does sell for a profit. Professional hard money lenders are in business to lend, and they want you to succeed so that you can flip more properties using their money. If by now you feel discouraged to seek 100% financing, you may be wondering how much most hard money lenders require you to contribute for a house flip. There are a good amount of lenders out there that will go up to 90% of the purchase price, and even more will max out at 80%. So the down payment required by most hard money lenders ranges from 10 to 20%. Almost all hard money lenders will fund 100% of the renovation budget because they want to control the disbursement of the funds. So your cash contribution is mainly for the property purchase and closing costs. And when you contribute a good amount of cash to the deal, the pricing will be much lower than the numbers I mentioned earlier. I've seen fix and flip loan rates go as low as 7.5% plus 1 point, but most are in the range of 9 to 10% interest plus 2 points. If you're looking for a hard money lender, use our website privatelenderlink.com as a resource. There's no fee to search and no registration required. From the loan type list, select residential fix and flip, then enter a state or major metro area. Use the refine results section on the left to filter based on the maximum leverage. And the field you want to use is LTP, which is short for loan to purchase price. Enter 100 and hit enter. If you don't see any results, change the number to 90 and reduce in increments of 5. Click on each lender's profile to learn about their guidelines, rates, fees, and much more. To get a clearer picture about their fix and flip program, scroll down to the Rehab Value Add section, and some lenders have a loan programs page with additional details. Reach out to each lender directly to discuss your loan request. You can use the loan form, send a simple email, or call them, or visit the lender's website. If you found this video to be helpful, please click the like button and check out our other videos about fix and flip lending. Thank you for watching, and see you in the next video.